one of the things that I do in terms of managing this time of year, let's talk specifically about the month of November and the month of December. One of the transitions that I make this time of year, and this is both for personal reasons and also for trading reasons, is I like to make a transition to shorter term time frames. So in this way, I have no expectation of longer term organization of sentiment and momentum, and therefore trend, when it comes to setups and follow through for my entries. So with that in mind, what I end up doing is usually jumping down to a 5-minute time frame, and I'll set up what I call my between the greens plays. But frankly, they're not always there. I do need a trend on the 5-minute chart to set up a between the greens, and I need corrections of that trend in order to enter the market. So while that 5-minute between the greens keeps me in positions for a short amount of time, based upon the 5-minute chart, there's usually less risk, and also I don't need to rely on, again, that organization of sentiment and momentum. Every now and then, what I'll end up doing is I'll realize, okay, there may not be that short-term organization of a trend in terms of the setup that I need for my between the greens, but in the case of, and we'll talk about specifically now, the dollar Swissy, when you take a look at the 30-minute chart, when you take a look at the 60-minute chart, what you'll see is there is a trend, an uptrend on both those charts. Now, part of determining this is understanding the process of triage. And I'm just kind of going through the different time frames right now. So here's a look at the 5, and I just simply don't have the wave angle that I need to confirm that this is in a trend right now. In fact, we're just kind of sideways, so I'll move on. By the way, that 5-minute could change very quickly. I won't completely take it off the burner. I'll just kind of push it to the back burner. I look at the 15-minute chart, and there is a fairly nice uptrend here. You can see that we've been moving up higher, but as of recently, there have been some tests of the 34 EMA wave and also a little bit of a flattening out of the 34 EMA wave that leads me to believe that, one, I don't have a lot of dynamic support here, and two, the trend is not necessarily as strong as some other time frames that I see on my screen. And that takes me to the 30-minute time frame. Now, by the way, this process of looking at each one of the time frames within this pair, within this world of the dollar Swissy, I'm looking at different snapshots, if you will, the short-term 5, the longer, slightly longer-term 15, 30-minute, 60-minute, 240 daily. As I go through each one of these time frames that I will consider for a potential entry, I look at the individual market phase, the individual direction of that market. In this case, we've just compared the 5, which really didn't have the correct environment for a trend following intraday between the greens setup, to the 15, which was in an uptrend, but is looking like it's transitioning out of it with not a lot of respect for the 34 EMA wave. And then I end up here at the 30-minute chart, where it seems that I have an uptrend also in place here, but that the wave is being respected and that the angle is healthier. I go up to the 60-minute and I can see the wave is every bit as healthy as what I just saw in the 30-minute in terms of the angle, definitely a 12-2. But on recent pullbacks, we haven't quite made it back down to the 20-period simple or the 34 EMA high. That brings me back to the 30. Now, you might be saying, well, Raghee, what about the 240 and the daily? Well, the 240 is moving sideways, even though it's moving up higher, as is the daily. So in terms of a trend follow and this intraday bullishness we're seeing, it looks like, for me, in my opinion, that 30-minute might be the best mix of the uptrend, what seems to be trades that are triggering in the zone that I would want for a swing buy, and so this is where I'll focus my attention.